Hi, Tom Lydon with ETF Trends here in Washington, D.C. at the Charles Schwab Institutional Conference, here with Anita Rausch, Head of Capital Markets at WisdomTree. Great seeing you, Anita.
You too, Tom. Thank you for inviting me.
Well, thanks for being here, and there's a lot going on in the ETF space. Obviously, WisdomTree is a huge player. What are some of the things that not only advisors, but investors need to know about the advantages of ETFs?
Well, I'm so glad you asked me that, because one of my main jobs in capital markets is to educate our investors on liquidity, but also on the benefits of the ETF structure, because the benefits, a lot of the benefits come from the exchange listing. So the ET part of ETFs brings investors a tremendous amount of benefits. And if I can indulge you, I'll go through a couple.
Please, yeah.
One of them is an extra avenue of liquidity. So because investors can go on exchange and trade the exposure back and forth, it insulates the ETF portfolio a little. You can trade the exposure of the ETF back and forth, and you do not have to trade in the underlying portfolio. So it creates an extra avenue of liquidity, especially in times of stress.
Yeah, so dig down a little deeper, because it's not that the shares, the constituents of the index are trading, but you actually have the basket that's trading, correct?
The basket is trading on a whole as a wrapper, as a standalone vehicle, right? The ETF itself. And then if we dig deeper, it actually creates a tax efficiency. And the reason why it does that is because not all shares that trade on exchange equal a creation and redemption. So that means that not everything you see that trades in average daily volume requires turnover in the ETF portfolio. And actually, ICI did a study a couple of years ago, and they estimate, actually it was a little more recently, but they estimate that only about 10% of the average daily volume of an ETF, all the stuff you see trading on exchange, translates into trading within the portfolio. So the portfolio is insulated, it doesn't turn over as much relative to any of the unlisted structures, so there's much less chance to create a capital gains.
Only 10% then is the creation and redemption portion that's traded that represents the underlying constituents, right? That could be taxable?
Well, right, so there is a tax efficiency to it, but because only 10% requires trading in the underlying portfolio, 90% trades on exchange, where market makers do not have to go into the underlying portfolio, trade the transaction costs, the bid-ask spread, the stamp taxes and whatnot, and that creates a cost savings. And investors see that cost savings in the narrowing of spreads. Now actually KCG, which is one of the largest market makers who are now Virtu, did a study a couple of years ago, and they concluded that 90% of the US listed ETFs with US equity underlyings trade cheaper than cost. So what that means is 90% of the time in a US equity ETF, an investor can buy that ETF cheaper than if they were to buy it themselves, replicate it themselves, or buy it in another unlisted structure. So the exchange listing provides an extra avenue of liquidity, it provides a tax efficiency, and it provides the ability to trade cheaper than cost, which is not something that most people talk about or really understand.
One other point that you made earlier was if for some reason one stock halts on the exchange, it doesn't mean
within the basket.
Within the basket. It doesn't mean that the ETF halts trading, correct?
No, absolutely not. Market makers are there to add value, and their added value is to understand exactly what's going on within the ETF basket. If one stock halts, they will assign a probability or a risk premium to it, tack that on into the spread, and then the ETF will continue to trade. We see this in numerous things. One, all of the international ETFs trade during the US day while the underlying stocks are closed. In the case of the Third Avenue crisis, when high yield froze because Third Avenue were closed to redemptions, the ETFs, the high yield ETFs, continued to trade 20 to 30 times their average daily volume over the course of that stress period to allow for a pressure release for the supply and demand that needed to get done.
So all this talk out there about ETFs causing stress on liquidity really isn't warranted, would you say?
I do not think so at all. I actually think they alleviate stress.
Yeah.
I think, as we were talking about, they create extra avenues of liquidity. They create a buffer to liquidity, as opposed to just one avenue, which is the underlying basket.
Yeah, absolutely. Anita, excellent. Great seeing you. Thanks so much for being here.
Thanks for inviting me. It was wonderful.